So if you've been following this channel since I've started it in the beginning of this year, you know that I have a pretty good history of choosing winners, especially for swing trading. I've always provided my advice based on good business fundamentals, solid product differentiation, and then multiply that with timing, micro and macroeconomics. My portfolio has grown significantly in the past 7-8 months. You've seen in my past video, I've shared with you my numbers. I've shown you screenshots of my portfolio. But the stock market is getting more and more unpredictable in like a ridiculous way. I've been trading for more than 10 years, and frankly, I've never seen it behave this way before, and this warrants a follow-up video. In this video, I'm gonna update you on why I think the shit and the fan is moving closer together, and I'm gonna share with you my thoughts on how I am taking my adjustments a step further, how I'm handling my own portfolio, and how I'm recommending it to you. So if this is the type of content you've been looking for, please hit that like button for me, and let's get started. Why am I getting more concerned? If you look at the recent stock picks I've had, ever since I put out that video about Zoom where I parked $100,000 in Zoom, the stock grew in an exorbitant way, beyond anybody's expectations. And then after that, many stocks have performed well. The stocks I've picked and recommended to you guys, they have also done very well as a business. And yet, post-earnings, the stock gone down. That does not make sense, rationally speaking, because investors, real investors, before we had a flood of gamblers into the market, what we would look at is that we invest in a stock, and if it performs well, but to expectations, then the stock will hold. But if the stock performs well beyond the expectations, especially if the CEO says that they need to adjust the earnings estimates even higher up, that optimism, that surprise is actually the technical term. That surprise should drive the stock even higher up because people need to account for the additional possibility of value created. But in actuality, these days, the stocks will go down. The only way that makes sense is that there is so many gamblers doing options trading, and they're just looking for a reason to sell. They're trying to sell before you, right? There's also a set of investors who now think like me, which is to say that we know there's a shit ton of options traders and we need to sell before the options traders sell. And that is problematic. The obvious solution here is that if you are a swing trader, you want to get ahead of the options traders. You want to get ahead of the unpredictability. And the only way I see you can do this right now is that you still leverage the 11-ish principle in stock picking, but you need to sell well before the earnings come out. This allows you to get ahead of the curve. And since we're a small community, hopefully we can do this before everyone realizes it. Because frankly, if everyone does that, then the date will move earlier and earlier, and it will not work. We have to be more critical about how we invest and leave our greed out the door. Because remember, guys, the name of the game is to win more than we lose. The size of our gain is all relative. Someone is always making more money than you. That is irrelevant. But if you can create predictability to your trading style, then you can scale up a lot easier. A simple example is that let's say you sell t-shirts and I sell t-shirts. And let's say that for every shirt you produce, you have a 5% chance of selling it at a $1,000 profit. Okay? And every shirt I produce, I have a 99% chance of selling it at a $1 profit. So for every shirt that we both sell, you make $1,000 and I make $1. But I have a 99% certainty that I can do it. If we extrapolate this into something huge, I am a lot more comfortable with throwing more money at my business because I'm certain, right, that I can generate profit. While you have a 5% chance of making the profit off of the goods that you sell. Just like stocks, if you are trading at a probability of less than 50% of making money, then you are effectively playing at a much higher disadvantage than you should. You should then get much more involved in bankroll management, how much money you actually invest based on the amount of risk. If every stock that you pick has a less than 50% chance of making you money, then you probably shouldn't trade at all. So now, if you're doing options trading and you feel very, very unpredictable in the amount of money you're spending and making back, and that this additional volatility is causing you even more stress and concern, then you should start doing swing trading instead of options trading, or long-term trading instead of swing trading, depending on how much risk you want to take in, how much more certainty you want to build into your stock investments. Once the market has stabilized more, which in my previous video, I hypothesized that it would be after the elections. And frankly, I'm not saying right after the election. You should wait a little bit, see how things play out. Then perhaps we can move back towards the original trading techniques that I've been using for years. But right now, we gotta be a little bit more agile in how we invest our money. Once I see the gain and see that there is a reasonable amount of profit made, I should collect. And you know me, I like to relate everything back to poker. And a very common way of looking at this is that when everyone else is loose, you gotta play tight. If the money is flowing freely and there's a lot of volatility, you want to be the one that's playing tighter. This creates predictability, and therefore you'll collect more money. You'll win more often, and that's what matters the most. Everyone else do their whole gambling thing. That's irrelevant. They're creating value opportunities for you. So that is my PSA for the week. How are your stocks being affected? I would love to hear about your stock picks, whether they're being affected like the ones I've picked, right? And I know some of you have left comments in my last video saying that you're a long-term investor and you're just gonna hold through, power through it. Good for you. I mean, we have decades of data showing that, as long as you invest in companies that has good leadership and good fundamentals, they are gonna power through and make you money. So these swing trading strategies, they're probably irrelevant to you, but I would love to hear back from you as well. Just to get your thoughts on the things, See how you think about the presidential election. If you've changed the way you've been trading, I would love to hear from you too. Maybe you've been sitting out, right? I want to hear that. The more information the 11ish Collective get from the community, the more data points that we have to work with to figure out what the right approach is next. Because crowdsourcing, in my honest opinion, helps a lot for investment strategies, because we create this extra edge. And also, just as a reminder, I'm going to have a podcast with John, our resident fund manager, and we're going to talk about another interesting topic for you guys. And I'm going to try to publish that by the end of this week. So please stay tuned. Thanks for watching, and good luck with your investments. Thank you.